Listen, a couple of things. This is year-end review, so a lot of my clients are in. We're reviewing their portfolio. We've done exceptionally well. This has just been an incredible year, not only for capital gains. All our properties have appreciated exceptionally nice. I think we got over almost 10% across the board, which is really incredible. We've also had increasing rental pressures. We've had rents going up over 9% for the year, so that's really, really good. So if you bought, here again, we keep saying, if you bought something last year and you were getting a 5% return, we here, unlike fixed income, we actually grow we grow your revenue. So if you were getting 5 last year, we've had we have so much rental pressure here, it's incredible, that probably you're getting 7, 8, 9% returns. So each one of these buildings is just a little different depending on what you did to it and where it's at, but we've had very, very good results all across the board. Keep in mind that we are very blessed here in Maricopa County in that we are a recipient of all the turmoil in all the other states. We are getting 222 people net a day moving to Arizona, and of course the new tax laws, because we're a low state, our property taxes are very low. We have a fiscally conservative government, and those tax advantages are going to show up with people voting with their feet, and of course businesses as well. I mean, why would you continue doing business in a high tax state when you don't have to? And of course this is just all new, and we're very, very blessed here, so we're really, really pleased with that. Now, we've been doing year-end reviews with people, and of course, everyone is very, very aggressive. They've had 4 or 5 years of really, really excellent growth, and we've grown their wealth really, really well. And everybody wants to buy more properties, so we are certainly looking for properties. But here's what I've noticed in just the recent searches that we've been doing in the probably last 60 days, is we have had a surgence of price. So when we do the calculations, our cap rates have fallen quite significantly, and that generally indicates that we are either about to have an explosion in rents, which is possible. I mean, we have a very, very tight rental market here, so maybe rents are going to go up. Or B, that we do have a little bit of a price decline coming to us. So keep in mind that I've been concerned about a correction coming in the last 6 months to a year. We've been talking about one possible, so this would be a telling sign. Now these imbalances that we see between price and rent can go on for quite a long time. This doesn't mean that this is imminent, that it's going to happen right away. However, it does show that we're starting to get these pressures in the housing here in Phoenix, Arizona. I mean, we've been reasonably priced. We have not been in a bubble. Our rents and prices have been in equilibrium with each other, but now we're starting to see prices get out of that. So maybe it resolves itself in the next 60, 90 days, and there's nothing to worry about. But it certainly bears watching. So this is our position on this. If you do have any properties that need to be sold, we need to really look really close at them. We've had a really, really good run in price. We've had good capital gains on these properties. So here again, keep in mind, we should be getting down to core properties, ones that we're going to keep. Remember, if we do have a correction, it will only be a correction in an ongoing bull market. So I expect significantly higher prices in 2023, 2024 time frame, which is going to give us plenty of time to accumulate. But the properties we have now are going to be our core lifeboats, so that if we do have any turmoil, why these will continue to cash flow for us and provide income that we may not be getting elsewhere. If things slow down, why this should really help mitigate any problems we have. So they're an incredibly important piece of our portfolio is this core holdings. Now, but you need to look at your core holdings. If you have something that has been difficult to rent, or you don't like, or you feel like it's coming up to some updating that you really don't feel comfortable doing, or you don't want to do, then maybe you need to start thinking of selling these properties, because I think that the time frame is probably really, really good for this, because stuff that we hold now, we're probably going to hold right through any downturn. So we're going to, if you think that you have a property that you need to sell, or should be selling, or thinking of selling, or your circumstances are to the point where you should be selling these things, now is the time to start looking at these, and let's get them done. Here again, keep in mind that not only do we buy, we sell, and we work with an awful lot of investors. Remember that yes, we do a lot of investment works, but we're also in the brokerage business, so we love to love to handle these. And of course, if they have tenants or if they're investment properties, we know how to handle it. We know how to work with tenants. So we'll be fine with that. We'll certainly help you along with that. But it does lead you to the point that you need to take a look at our portfolio. And if we do have, remember, we typically look at a correction 7.5 to 9 years after bottoming. And bottom, of course, I've talked about this ad infinitum. The bottom occurred, late 2009, 2010. So 7.5 years from late 2009 puts us into mid 2017, which would have been like the July timeframe. And we could go from July 2017 to probably mid-February 2019. So we're in this vulnerability period. So we just need to be careful. And I'm going to say if we have any kind of problems from overseas or within the country itself, we're vulnerable to a correction. And that correction is, as we're looking at this, could be 10 or 15% plus. So I think at this juncture, our calculations show that we're probably about a 16% overvaluation at the moment. It's not terrible, and this is just a recent development, so it's not something that has been ongoing. So it may very well resolve itself. We could go into January, February, get a huge influx of people that have been kind of pent up from the holidays before they're going to make their moves. I mean, this would be not be an unusual thing. And then come over here and have having housing pressure again drive rents up, and equalize them with purchase price. So that's possible. So I'm not saying that we have an imminent correction. I'm just saying that we're in a period of vulnerability for it, and it certainly bears watching. So once again, here we are. We're doing year-end reviews, and we're happy to review your portfolio with you. Remember, we are income investors. I mean, that's our leanings are towards income production, and we're not flippers or anything. I mean, you're always interested in finding something we can flip and make a quick dollar for, but we're really looking to get real wealth, because here again, our cycles work is showing us, and of course it's I shouldn't say our, I'm sent information from some of the top researchers in the world, and I just collate it, and the collation looks like we're getting to the point of a change in cycles from financial assets to real assets. And keep in mind, when you're dealing with financial assets, they are only a claim on real assets. They are not real assets. So if you own a stock, that stock can go to zero. You have absolutely no claim on anything. A bond, at least at a bond, you have some kind of claim as the claim holder, but here again, it's only a claim. So I would say to you, it's time to start thinking of converting from financial assets to real assets, not only for retirement and that, but also cycles appear to be changing. So anyway, this is Michael. I'm in Scottsdale. We're going to wish you the very best for a Happy New Year if there's not another video in between here. And as always, you're welcome to call if you're reviewing yourself, doing your financial goals. We're more than happy to sit down and be part of that for you. So my very, very best with you, and Happy New Year. Bye-bye now.